Started. So welcome everybody to our stock market weekly update here on October 21st, 2019. And yeah, we're in the thick of earnings season now. Last week was really kicked off by the big banks, and a lot of financials reported last week. I'll talk about some of that here in a minute. But this week we start to get a more broad base of companies reporting, a lot of companies reporting this week. So that's really going to dominate what's happening in the market, I think, unless, of course, we get some weird geopolitical event or, more trade war tantrums. But for now, it looks like the trade war stuff is actually trending positively. And the focus is really turning towards corporate earnings for Q3 and their outlook for the rest of the year. So that's really what we're going to be, what I'm focused on. And I think, it's interesting because we saw for the first time in Q2 and Q3, earnings for like the S&P 500 were actually down slightly year over year, which were the first two quarters where we'd seen that in like almost a decade. So that trend was not looking great, but it looks like as we move through Q3 and possibly Q4, that trend may be getting a little better. We still have a lot of companies to report, but the financials that have reported so far, the earnings have looked really good. JP Morgan here, as I'm showing, new all-time high in the stock. They're seeing earnings growth of over 20%. They saw really good trends in their credit portfolio. Still, they see a healthy but slower growing U.S. economy. When you look at a company like Citigroup, same sort of deal. Citigroup actually has a little bit more of a global focus. And, they basically had about 20% earnings growth for the quarter. They see credit trends being stable. They see, some particular signs of potential improvement in other international parts of the economy. Goldman Sachs, same deal. They said that they saw some shifting of sentiment among clients with the trade war stuff in Q3, but they still expect global GDP growth in excess of 3% this year. And now they did call out some deceleration of growth in Europe and weakness in Germany, which we've talked about. We could see that in a lot of the macro data that we've been following, especially on the manufacturing side, right? I've talked about the manufacturing recession that we saw. So I think, that's important to see. It seems like the trend so far of all these companies that have reported has been to suggest that, growth is still okay, but has slowed somewhat, especially in certain areas. And the U.S. looks still pretty good. Like I was just reading, American Express's earnings call transcript, and they say, they're seeing an expanding economy, but at a slower pace. United Rentals, which was actually not a financial, but, it's a company that rents construction equipment. So they're always an interesting read on some of the sectors that might actually be seeing some weakness, right? So they actually had 5% revenue growth in the quarter and had record quarterly EBITDA. And they think that the construction landscape remains actually pretty strong, especially on the non-residential side. They saw growth of 9%. They do see pockets of weakness in places like upstream oil and gas. We had companies like Snap-on, which sells like tools. They reported 3% growth in the US, but said Europe was weak, especially in the UK and Germany. And also some weakness actually in the Nordic countries. So that was interesting to hear. So the trend seems to be for a lot of the main theme that I seem to be picking up from reading a bunch of different earnings calls is that global growth has slowed, especially in certain areas, but overall still positive. And there may be some signs that if we can get a resolution on some of the trade war uncertainties which have been hurting business investment, then we might actually see a return to a more healthy rate of growth for some of the sectors of the economy that have weakened in the past 2 quarters. So I would say cautiously optimistic on earnings results so far broadly, given what we're seeing. And indeed, the S&P and the NASDAQ were up just a little bit last week and starting this week pretty strong. As you can see here, ended the day up almost 1% on the NASDAQ and about 0.75% on the S&P. We saw some strength in Asia last week, and Europe was kind of mixed. That's kind of what we're seeing from a broad indices basis. But yeah, I mean, so far these earnings reports have been pretty good. No, out of left field negative surprises. And it's good to see the credit trends and consumer spending remain stable. When I listen to the big banks talk about their earnings call results, I always like to kind of understand what's happening with consumer credit trends. And they all seem to be pretty comfortable with what's happening from a consumer perspective in terms of credit trends and consumer spending. So, and I think a big part of that is the unemployment picture still remains pretty good. Still have low unemployment rates generally, and like I said, if we can get some of the other geopolitical uncertainty cleared up, I think that would clear the deck for things to really start to improve. And if you remember last year, Q4 last year was a particularly bad quarter for the stock market. And so a lot of companies actually may have some easier comparables as far as growth is concerned for Q4 earnings. So that's one thing to watch, is we could get an uptick in Q4 outlooks just based on the fact that it's going to be an easier comparison. Remember this, this huge sharp sell-off we had in the market. It was a 20% sell-off from, essentially October through the end of the year almost. And we bottomed around, I think, the 24th of December last year. Now, when we have such a sharp decline like that, that's definitely going to impact, business results at least a little bit in terms of, business investment and confidence of businesses to go out there and spend and hire. So, we didn't see like a massive decline last quarter in last fourth quarter's earnings, but I think it probably maybe held back some potential growth that could have happened. So there may be an easier comparison here as we move into Q4 of 2019 for that. So that could be a slight tailwind as well. In terms of macro data from last week, let's just pull up Trading Economics, because that's a great site. But yeah, I think last week it's pretty light in terms of macro data right now. Last week we had retail sales for September. That number actually looked a little bit weak. I don't like to look at the month over month. I actually like to look at the year over year. On a year over year basis, retail sales were still up about 4% year over year. They were just slightly weaker than expected though. But it's overall still looks pretty good. For this week in terms of macro data, we get I think just one or two major pieces. On Thursday, we get durable goods orders in the U.S. Let me see if I can pull that up. So yeah, here in the U.S., we get durable goods orders, which is always, kind of an indicator of how, larger purchases, especially on the consumer side, are doing and what that signals for the economy. But durable goods orders, and then I think there's the ECB rate decision and press conference. So that'll be interesting to see kind of if there's any changes. Sorry, I'm trying to move my window here. Yeah, so like I think if we use like Koifin's macro calendar here, it's a little bit cleaner to see across countries than Trading Economics. So yeah, you can see here we've got the ECB rate decision and the press conference and some consumer confidence data on Wednesday. But that's about it. Pretty empty calendar in terms of like high importance macro data. Yeah, so for this week in terms of earnings, quite a few. Today was a relatively lightish day, but tomorrow we get a bunch of companies, and Wednesday and Thursday, a huge number of companies. And I'm just going to name some of the ones off that we have. By the way, if you want to go see like all the companies, I think Seeking Alpha is actually a good source for the earnings calendar. If you want to look at under latest news earnings calendar, it'll show you kind of day by day. So, on Tuesday, we get Pulte Homes, we get Lockheed Martin, McDonald's, iRobot, which is one stock that we kind of had an eye on, PACCAR, which makes, big trucks for commercial trucking. We get Whirlpool, Discover Financial, Chipotle, United Technologies, Sherwin-Williams, the paint company, Harley Davidson, the motorcycle company, UPS, which will be a obviously widely watched because it's a bellwether for, the health of shipping and commerce and things like that. So a lot of people will be watching that one. On Wednesday, we get companies like Boston Scientific, Boeing, which has been in the news, Caterpillar, which is a good readout on the industrial side of the economy, NASDAQ, the exchange. We get Winnebago, which makes RVs, Align Technology, Microsoft, Las Vegas Sands, the big casino company, Tesla, PayPal, JetBlue, eBay. On Thursday, we get Amazon and Intel, which will be huge. Alaska Airlines, Southwest Airlines, Twitter. We'll get, lots of different companies like Capital One Financial, First Solar, LogMeIn, Visa. And then Friday, we get Huntsman from our watch list, Verizon, Charter Communications, Metadata Solutions, and Goodyear Tire, and a few others. So quite a few here, as you can see. I mean, we're just scrolling down here, and this is only through Tuesday, so far. You can see all the companies that are reporting earnings here. So yeah, pretty big calendar here. And yeah, there'll be a lot of news to digest there. A lot of single stocks making moves. In terms of position changes from looking at our watch list, I added some to Devon Energy last week as it dipped slightly under $20 a share. And, that was really because, this is one that I've been watching. It's been pretty volatile, right? It's been pretty up and down. It's been, sort of, I would say just like the oil and gas sector generally, it's been a bit of a roller coaster. It's been between 20 and $30 depending on the month this year. And, I'm just using the opportunity, the volatility to acquire more shares at what I think is a pretty cheap long-term price here at about $20 a share. Trades for about 10 or 12 times expected, next year earnings, which is pretty cheap. This is a very well-managed company. I think I walked through their investor presentation on the call last week, but again, I think this is just a really disciplined, well-managed company that has a pretty clean balance sheet. Like, the problem with a lot of oil and gas companies is that, they're just overstretched in terms of debt relative to cash flow. Whereas a company like Devon is actually in a pretty strong position with under 1 times debt to EBITDA. So that ratio is one of the ratios I look at when I look at, how much debt a company has relative to its earnings. And so, yeah, I mean, Devon, one of the stronger balance sheets in the industry. They focus on shale plays and in some of the cheaper cost shale basins in the U.S. So obviously shale, the problem with U.S. shale is that it's a bit oversupplied, especially on the natural gas side right now. But Devon has a really low cost position and is able to turn a profit at today's prices. And, they seem to be doing all the right things with regard to capital allocation. I think this is actually a pretty interesting acquisition target for a larger company that may want to roll up assets in this industry while they're cheap. But I'm not betting on an acquisition. I'm willing to hold this long term, but I think it's a pretty compelling entry price here. And oil prices really weren't down very much last week. I think they were down 1 or 2%. But the sector is just so hated that, these stocks are getting no love. So, Devon, as it's reaching, a multi-year low here, I think is actually a pretty interesting play. So this is a company that used to be able to earn like over $5 or $6 a share. You can see how the earnings estimates have come down over time. They'll earn about $2 a share probably next year. And so, again, that's about a 10x earnings multiple or so, which is pretty cheap. But again, this is a company that, if things recover in this sector, could be earning north of $4 or $5 a share pretty quickly. So in that case, the longer term share price potential is probably closer to, $50, $60. And so this is definitely a stock that can be a multi-bagger, just needs some things to kind of go its way in terms of the general industry. And I've been watching some of the earnings reports. We've only had a few so far from the oil and gas sector, but like Halliburton, which is an oil field service sector company, they reported today, and they're seeing bright spots in terms of activity in the sector internationally. They do think that North America is weak, but the positive sign they see there is that the rig count has been declining. So the supply is starting to, the trend is actually is good, because a lot of companies are actually cutting the supply of oil and gas in the domestic sector and being a little bit more disciplined in terms of needing to produce cash flows and not being as aggressive about expansion. So I think, on a multi-year basis, it may take a little while to get there, but I think this is going to be a pretty good return from these prices on a multi-year basis. So happy to make that position a little bigger. Still lots of room to make it bigger if things get worse and it goes lower. But I like those prices when it's selling off and there's really not anything fundamentally happening with the particular company or even oil prices. So that's kind of what I was thinking last week on Devon. And again, I think, you all probably know this, but Encana is really the second big position I have in that industry. And I've talked about that at length. And there's a couple of things that I think are interesting there as well. Insider buying has been aggressive, and I think it's pretty undervalued, and they have some really good assets that they made through a big acquisition in the last 2 years. And so they've been able to, I think, it's going to be interesting to watch that company, I think, recover as well over the next couple of years. So that's kind of how I'm looking at that. I don't want to get too overexposed in that kind of a sector that's still dependent on, global oil prices, oil and gas prices, but commodities, especially oil and gas, do tend to be a little bit less correlated to the rest of the stock market. So it actually can be beneficial from a portfolio perspective to have some oil and gas in your portfolio, as long as it doesn't, totally dominate your portfolio. I think it's from a portfolio management perspective, is actually can be a pretty beneficial thing. So again, that's another benefit of having some exposure here, even though the rest of the, investment community is really shunning oil and gas right now. So, and that's really all in terms of my position changes. I don't think we have Nikki with us today, but I don't think she had any major position changes last week either, as far as I recall. Other things that are happening, Nordstrom on our watch list, they have their flagship Manhattan store that's opening this week. That stock's actually recovered a bit from its lows earlier in the year. The retail sector, especially on the clothing side, has seen a little bit of positive data in September, at least incrementally getting a little better. We're going into the Q4 selling season, so the holiday season often gets people excited about retailers, and the sentiment changes a little bit. So that may be what's happening here. There was also some rumors back about a month or two ago that the Nordstrom family was exploring ways that they could increase their stake in the company and things like that. So the stock's just been kind of quietly moving up. It's back a lot closer towards where I was buying it. So it's good. It's actually pretty close to my average cost now, but I don't think there's a whole lot of fundamental change to the story, but it'll be interesting to see how the new flagship store in Manhattan does, because they've spent a lot of time thinking about that and spending capital to open that. So hopefully that performs well. And other than that, not a ton happening with the watch list. I noticed finally getting some positive movement here in CTT. Quite a good couple of weeks here with the stock price recovering, 25% or so. So big day today. I didn't see any specific news. There may be some, I don't know, maybe some people know something behind the scenes. Maybe there's something happening in Portugal that I don't know about, but there hasn't been any actual news put out by the company. So kind of waiting and watching to see what's happening here. But yeah, the stock's performing nicely and starting to move well above our average cost here. So that's good to see. And again, I think this is probably a double or triple with the potential to be an even higher return over a few years if they the management and board really gets the things that they want to do from a turnaround perspective done, and unlocking value through a number of different things that I've talked about, including potentially spinning off the online bank that they own, selling real estate assets, cutting costs, being able to raise prices, and the new management team being incentivized in the correct way. And so, these are all positive forces that could potentially benefit us here as shareholders. So it may take a bit to play out, but good to see it heading in the right direction. And that really is the only other thing. I mean, Chinese stocks seem to be getting a little bit of love so far this week. I've noticed maybe the trade war news is helping sentiment there a little bit, but I don't think there's any other major news with the watch list currently. I'm just scrolling through here, taking a look, making sure I didn't miss anything. Zillow Group's moving up a little bit. This is one that I think is interesting. And it's just a question of price. But a hedge fund manager that I really respect, I spent some time talking to him about this position last week. And he thinks if things go right in this business with the shift to iBuying, that new business model that they're going after, if things go right, he thinks this can be a 10-bagger stock in 5 to 10 years. So it was interesting to hear him talk about it. And he thinks they have the strongest competitive advantage in that industry, even against like a company like Opendoor, which sort of pioneered the iBuyer model. And he thinks it could also be a potential acquisition target. So I found that kind of interesting. But so kind of keeping an eye on that one, and hopefully it doesn't get too far away from us. But yeah, that's kind of it. Do you guys have any specific questions on any specific stocks this week? Someone was asking in the channel, I haven't had a chance to address it, but they were asking about Teva, which is a pharmaceutical company out of Israel. I believe they're based in Israel, but they have been under pressure because of the opioid lawsuits, which are facing a number of pharmaceutical companies who have been accused essentially of really pushing opioids on more of the population than should have ever been subscribed them, right? And incentivizing doctors to overprescribe opioids and things like that. And so that's created problems with opioid addictions in the US, which has a lot of negative ramifications, obviously. But Teva being one of those companies, there was rumors, I think, that there was going to be a settlement here. I don't know if that news is actually out. This isn't a company that I've followed particularly closely. I know that in the past, there's been some concern in the investing community about this company, about some of the things that they've done that are on the basically unethical side, even outside of the opioid crisis issues. Yeah, so I guess there's conflicting news on what's happening with the opioid settlement. When I see a stock chart like this, it definitely gets me interested in taking a look, like what's happened here. Why is the stock down 80%? Could there be value here? It's definitely one that I think I should probably spend some time taking a look at. I don't have a strong opinion on it today. Obviously, it seems like an opioid settlement would potentially help the situation there. But again, I know that just from a general background, this company has there's a lot of investors in the investing community who believe that this company has done some things, I think even on the accounting front, that are a little bit shady. And they have a lot of debt on the balance sheet. So that's another concern. And so I think that's probably why the stock's down so much. Let's look at their balance sheet. Yeah, it's really too early for me to have an opinion on it. I'll have to take a deeper look at it. So it looks like about $2 billion in cash. So short-term debt of 2.7 billion, and then senior notes and loans. So long-term debt of 26 billion. Yeah, so quite a bit of debt. Looks like 30 billion plus of debt. I don't know performance-wise really it looks like. Revenue's down. Gross profits down this year, so that's it's not great when you have a leveraged balance sheet and you have your financial performance is declining and you're facing legal liabilities. Let's look at their income statement here. So on a trailing 12-month basis, and you can see here the revenues have been coming down the past few quarters quite a bit. They were doing over 23 billion of revenues just like 2 years ago. So revenue's going in the wrong direction. Still a pretty profitable company. It looks like debt to EBITDA is probably about 5 or 6 times, which is a very high ratio. I typically don't like to invest in companies that have net debt to EBITDA ratios over, like 2x or 3x. It does depend, like real estate investment trusts, like with Macerich, it's a little bit different because they have hard assets backing it and they can be leveraged, safely at a higher multiple. But with companies like this that depend on, earning streams, then, to service the debt, that's a concern if those ratios get above 2 or 3x. It looks like interest expense is actually pretty low relative to debt. So their debt must be like low interest rate at least. But yeah, it doesn't look like the performance of the business has been great recently. I wonder if any of that has to do with opioids or if there were other issues in the business. I'd have to spend some time looking at this. Let's look at the estimates. It looks like, yeah, and earnings estimates have been coming down. So earnings estimates for like 2020, 2021 look like they're about 250, 260 per share, but still coming down. Now that if they could safely produce over $2 in earnings per share and the debt is manageable, then this is a really cheap stock because that means it's trading for like 4 or 5 times earnings. There may be, I'm not sure what that legal liability looks like. We'd have to figure out, we may have to add to the total debt load. We may have to add, whatever this is supposedly going to cost them in terms of settlement. Maybe if this is a multi-billion-dollar settlement, then we got to add a couple billion to the, potentially to the, they may need to either raise equity or raise debt to pay the settlement. So I'll have to spend some time looking at this one. It's definitely interesting. But I'll have to get up to speed on it. So no strong opinion at the moment, but yeah, interesting. It's getting a little lift too today. What else, y'all? Any other specific stocks you're looking at or paying attention to? I'm gonna pull up iRobot. I haven't checked in on that one in a while. It never really got down to the level at I mean, it's still not great, right? Let's go to daily chart. Yeah, still kind of waiting for it to get down to like a little bit cheaper territory, but it's not performing super well. And I think they report on, what did I say? I think tomorrow they report. Let's see. Let's check their investor relations site. We can always get the exact, here's the press release announcing their earnings call. Doesn't want to open for me. Their links aren't working, but it looks like the 22nd, it doesn't say, it looks like their conference call is going to be in the morning on Wednesday. So they'll probably release their earnings on Tuesday after the market closes, and then they'll have their call in the morning on Wednesday at 8:30 Eastern time. So that'll be an interesting one to watch. I think there could be, pretty interesting movement. We could look at the options market too to see what the options market is predicting in terms of implied move for the stock over its earnings results. But yeah, I don't know if there's been, okay, they reshuffled their C-suite. So they've got some resignations of their COO. That's never a good sign. But it looks like they're going to eliminate the COO position and create they've got a chief product officer position now and a new chief commercial officer position. It's interesting with this stuff. It's always interesting to find out, as often you can talk to the investor relations team and figure out what really happened here, because, it looks like the COO resigned, but it's possible that he was pushed out. It's possible the company said, hey, like we're going in a different direction. Like performance hasn't been good and we're going to bring on new management. And that might actually be a good thing. But if they're having like C-level people just resign out of the blue, that's not a good thing. So it's hard to read how that if that's actually positive or negative. We could look up if this guy already has taken a new job. The other thing is we can probably look at the press release. There may be some more information in the press release. So if I look at like the 8K. Yeah, so it says that Christian Serta notified iRobot of his decision to resign effective immediately to pursue other career opportunities. Huh. Sounds like he just up and quit. But again, we don't know. He might have been forced out. Oftentimes when an executive is forced out, though, it'll say something like, they've decided to pursue more time with their family, or, and there's no disagreements with the company, or it'll say, they've decided to retire or whatever. So with this, it's clear he's like looking for another job. So it's possible he already has another job lined up. And sometimes, let's see, look him up, see if he's on LinkedIn. Sometimes they'll have their next position already listed, but it doesn't look like he does. Yeah, it's interesting. Yeah. Thanks, LinkedIn. What a disaster. Anyways, so yeah, I don't know what's going on with iRobot, but there's some weird signals going on there. And from a financial perspective, I think, what did I say? It's I think it was, well, last we looked was what, mid-teens or high teens earnings multiple on current estimates. But estimates have been coming down. Yeah, so for like 2020, next year, it looks like about $3.30 estimated earnings. This year, about $3 in estimated earnings. And again, those estimates have been coming down. So, at a $55 share price, it's actually, it's still like high teens multiple of earnings. Now, this company has been growing. So depending on the growth rate, that might be an appropriate multiple. But yeah, I mean, they were growing last quarter at, let's look, at about 15%. Of course, Q3 and Q4 are pretty big for them because, robotic vacuums often go on sale during the holidays and get purchased as gifts. And so their Q4 is always seasonally a strong quarter, as you can see from their revenues here. So a lot of their annual profit is actually made in the fourth quarter, third and fourth quarters. So yeah, you can see gross margins have been under pressure, and profitability has declined. So that could be pricing war in the industry, cost issues with the trade war, things like that. So I should probably spend some time looking at this one too. I mean, they're often, iRobot is often mentioned as kind of like a sexy tech growth stock because, there's components of machine learning and computer vision, and they're rolling out new products like the robotic lawnmower and things like that. So it's, robotics is kind of one of those like sexier areas. So like this can become, or has been, a story stock, that kind of has like an exciting story behind it. But when the actual fundamentals of the business are not working, it's kind of hard to make that story. So you can see like on a 5-year chart here, this was like a sleepy stock for a long time. I mean, they've been selling robotic vacuums for like 15 years, 20 years. And just in the past few years, did it kind of like get that story behind it with the whole robotics and automation story that everyone wants to get excited about, and push that stock up quite a bit. Yeah, OCY. I said I mentioned earlier I didn't see any news related to CTT. I looked on their investor relations site. Didn't see anything official from the company. I can put out a feeler and see if some other investors I know that are invested in it have heard anything. But yeah, I didn't see anything official. Waiting for that site to load. Man, yeah, the site's not loading for me now. But when I looked, here we go. So when I looked earlier, I didn't see anything. Yeah, there hasn't been any press releases from the company since September. So I'm not sure. Yeah, somebody's doing some buying behind the scenes though, right? I don't know. But like in the grand scheme of things, still some ways to go, huh? I think my average cost on this is about 215, 210, 215, something like that. So cool. Well, if that's it for today, I guess we can cut it off there and chat in the channel. But yeah, if you have any other stocks that you're looking at, let me know. Like I said, big week of earnings, so there'll be lots of things to dig into. All right, y'all. Well, I think that's it for today then. Yeah, like I said, find me in the channel and have a good rest of your evening, good rest of your week. Take care, everybody.